Hey, good morning, YouTube. Hope everyone had a great week trading. Figured I'd give a kind of a March update and also a 3-month update since those Christmas Eve lows. So you guys can see my performance here, up over 25% since that time period. You can see my portfolio dipped to below 8,000 on Christmas Eve. So been digging my way out ever since, and I did really well. So beat the S&P and Nasdaq performances. I'll kind of show you guys those in a little bit, but been clawing back out. There's my month performance, my week performance, and then yesterday was actually a pretty red day. Thought I'd end the week green, but there was some stuff with fears of slowing global growth, and then we had the Mueller report and all that, and a lot of uncertainties in the market. But great week overall because the Fed did leave the interest rates unchanged. So a little bit of extra confidence, I guess, in the markets this week. So they won't be raising the rates at all in 2019. So some people say it's a good thing. Some people say it's a bad thing. It gives us less kind of tools to use if we do have a recession of lowering rates. So we'll see what happens. But good couple months in the market since those lows, and kind of show you guys my yearly performance here. Still off the highs over here back in the summer, but up 41% over the last year. Still really good. Happy about that. But yeah, just kind of trying to continuing to make good trades. Risk management's really important, and just got to keep grinding. So I have made it a habit to kind of sit on some cash, and kind of take those opportunities where stocks choose to drop and pounce on those. And that's actually worked out for me pretty well the last couple months, and I'll kind of show you guys what I've been doing. So kind of go into it. Start with the options. I'll start with CGC call. So I did buy a $75 call right after their earnings when they dipped to around $49. So down on this investment overall. I'm still holding it until July. So just put in $195. So obviously the biggest marijuana company in the world, in Canada as well. So they have a lot of potential. The Farm Bill passed a couple months ago in the U.S., so a lot of opportunities for hemp as well. They just acquired a hemp company in the U.S. as well, and are thinking of expanding operations in New York too. So U.S. legalization, who knows when that's going to be here, whether it's this year or next. It's inevitable that it's going to happen. So CGC is definitely going to be one of those companies that benefits in the end. So Canopy Growth there, they dipped under 45 yesterday. They haven't had a good week and month, but over the last 3 months, it's been a really good performer, 74%. So Canopy's here to stay, and great company to be in long, if you were interested in this industry. So moving on to Axon, I've talked about this stock before. They're the manufacturer of taser guns, but the true revenue story with them is their services. So obviously they sell all their body cameras, car cameras, all that kind of stuff to police, municipalities, paramedics, and potentially even truckers now in the future. But police body cameras are their big thing now, and I'm excited about their increasing services revenue because once they sell these cameras to police departments, they kind of lock them in contracts, and then they keep all their video storage in the cloud with them. So obviously these police departments are paying Axon for that. So high revenue growth company. They have also kind of dipped in the last month or so. So that's when I kind of got in under 50. And, it's been having a good week up until yesterday. So, up on my initial investment. It's a September call. So feeling pretty confident that it's going to continue to rebound. But I will be selling whenever I feel like the profit is ripe for the taking. So always willing to take advantage of opportunities if they present themselves. So there's Axon for you guys. Moving on to my next option is Activision. So this one's I've had since last year. Not doing really well. Down pretty much everything on this. Sunk in about $500 for this, but it's been slowly going back up. Activision actually had quietly a great week and month. So who knows? Maybe it'll hit near that point again, and maybe I can sell for a smaller loss. But they've gotten shelled pretty hard along with the other gaming companies. Fortnite's obviously been a threat, but then 2 of Activision's CFOs left from Blizzard as well as Activision. So there's been a little bit of turbulence with this stock and with this company. They sold off, I believe it's Bungie, whoever makes Destiny for them. But there's a little bit of turbulence, but hoping that their next Call of Duty will be huge. And I look forward to E3 and all those convention shows, kind of showing what's next for them. But really low price to earnings, under 20. Gaming is here to stay. Esports is still here. I think if you're in the long term, I think we did reach the bottom here. So potentially buying a long call like I did last year now would probably be a great idea. So obviously they're the biggest gaming company. So let me know what you guys think about Activision here in a sec. So moving on to Aurora. So I bought Aurora $10 call. The premium on this was kind of irresistible. It was really low. So up 32% on this. So I put in $195, but it's a 2021 call just to hit $10, and I already did that within the last couple weeks. So you guys can kind of see that hit that point. And one of the reasons is that Nelson Peltz, an activist investor, actually became an advisor for Aurora. So good news that sent kind of good vibes for the stock in the market, and it did come up, but before kind of going back down. So $10 does seem like that resistance point where might fluctuate around here for a little bit, but not worried about it. It's a 2-year call, and I have high hopes for Aurora Cannabis, probably the second biggest player next to Canopy, but potentially they do have the biggest growing capacity out of all the growers. So they did purchase a medical marijuana facility in Portugal recently. I believe they're looking into Germany as well. So a lot of international potential as well with this stock, not even mentioning the U.S. part of it. So who knows? Maybe that might help them strike a deal with Nelson Peltz. You can kind of see the articles here. In the past there was rumors that they were talking to Coca-Cola, all that. So Nelson Peltz has that experience. You guys may remember him the most. He was trying to kind of shake up Procter & Gamble about a year ago. So he's worked with a lot of these big consumer staple companies in the past. So we'll see if he can bring his magic to Aurora, potentially get them a good partner in the future. So those are kind of the options. My strategy going forward with these is, not to put in more than 5% of my portfolio at any given time with these. Trying to keep it low, trying to sell winners where I can, and put them into stocks that kind of, have some rebounding capabilities. So, those are my options, and I'll kind of go into the stock. So, Power shares, QQQ, so NASDAQ index. You guys may remember I did initially buy 5 shares. I bought another 5 back in, let's see here, in February. So I did try purchasing some contracts at some point here, but didn't end up going. But yeah, I think this is one of those safe kind of ETFs. Investing in tech, really. 18% of my portfolio. My initial 5 shares, I got in at around $140 I want to say, and then bought a little when it went up. And so nice average cost there, $159. You're investing in tech, you're investing in the big Amazons, the Apples, the Facebooks, Googles of the world. So I think this is gonna comprise my core of my portfolio eventually, where I'd like it to sit around 30-40% of my total thing. So my plan is to kind of put any wins with options into this stock. So kind of like a safe-ish play, but, you know, it does have a growth story. You know, obviously the NASDAQ has outperformed the S&P 500 for the last, 10, 15 years. So, you know, I continually to have high hopes that it will in the future as well. So moving on to MJ, marijuana ETF, 25 shares, probably my best performer over the last 3 months. You guys can see up 58%, my total up 48%. So I did buy those 25 shares, around Christmas Eve, actually just before the new year. So you guys can kind of see the average cost there. So bought in under 25, basically at what this, was initially, back when it wasn't even a marijuana ETF. So I was like, okay, I'm going to bounce on this, and it's definitely going to rebound. At that point, weed stocks kind of had a bit of a dip going into the new year, and figured I'd be in it in a long term, so I'd open up a small position. So at that point, it was about 5% of my portfolio. Now kind of going up to 10%. So really excited about the performance here. There was news this week that a US based ETF will be coming out as well. So I'll be looking into that too. So a lot of the smaller names people talk about, Charlotte's Web, and a lot of those US plays, Acreage, that, you don't know who the big player is going to be yet. So, something like that might be a smart play. This stock, or this ETF, holds mostly Canadian companies. It does have some of those tobacco companies like Philip Morris and Altria, as well as Scott's Miracle-Gro, but it's mainly Canadian for the most part, with all those canopies and auroras and Afrias that people are accustomed to knowing. So, once this US one comes out, I might consider selling 5 or 10 shares from here just to kind of put into there. So we'll see. We'll see what goes on when that IPOs, and yeah, we'll go from there. Moving on to Costco. So I've held this for a while, as you guys know. I'm thinking about them back in September, I want to say, or August, late August. So bought it around $230. So, since that time, it's kind of dipped, and so you guys can kind of see, bought it around here, kind of near the highs. So doesn't matter if you're in it for the long term. I kind of had to endure this whole, bottoming out here during this correction, and all those Fed fears. So, kind of looking back at it, kind of should have known it was overvalued, but did it go down? Ideally, would have loved to purchase under 200, but now kind of back up and where it started. So they had a great earnings report a couple weeks ago. Like I mentioned in the past, I love shopping at Costco. It just seems to be more and more crowded by the week. People love shopping there. Their Kirkland brand is amazing. Their online store is improving, but they continue to drive in-store sales and traffic, and I don't see them having a problem with that. In my opinion, they are pretty much Amazon proof, because people do go there for the experience of shopping. They find something new every week. They rearrange things. They have, different vendors that bring new products and great packaging. So, Costco, they also have their gas stations, which serve as a loss leader to kind of bring people in. And they offer many services. When you leave the store, they offer many different things. They have their auto shop, but they also have, things for the home, vacation packages, garage doors, like pretty much everything you can kind of think of. And obviously Costco members get good discounts on that. They even sell coffins, if you guys didn't know that. So just an interesting tidbit there with Costco. Love this stock, honestly, almost 12% of my portfolio, but, people say it's overvalued, but, I'm fine holding right now as it is, the amount of shares I have, but I would love to accumulate more in the future. So there's Costco for you. Moving on, Planet Fitness, probably the best performing out of all the company stocks in my portfolio. So almost at $67. You guys can kind of see their performance there. My performance here up 104% total. So $340. I did sell off 5 shares towards the beginning of the year just to lock in some gains and use that for other purchases, but still holding on to 10 shares, a little over 6% of my portfolio. Love this company. Also great, sales, and they're, continuing to expand locally and internationally. And people have, grabbed this company, and they like the brand. They like where they're going. It's kind of the everyday gym goer where, they just want to go for, half an hour, 40 minutes, stay in shape. They do serve pizzas and stuff like that in the thing, so it kind of keeps people from going somewhere else. It kind of locks them in because it's $10 a month. They serve pizzas at the gym, which is kind of counterintuitive. I think it's every Monday or whatever. But that's their strategy, and it's been working for them. It's kind of like the everyday gym for the normal person. So they had a great earnings report last month. Kind of been around that, floating around the high 50s range, and then just kind of popped. So really happy with the performance here. Strategy with this, I'd love to buy more if it dips, but if it keeps going up, I wouldn't mind selling another 5 shares as long as it's over that 5% threshold. I don't like holding very small positions. I like them to at least comprise 4.5–5% of my portfolio, just so they have a chance to grow and make an impact. Because at that point, you're better off just buying an index if you're going to buy really small positions. That's my opinion. And it's less to keep track of. Having 5–6%, percent position portfolios with companies, allows you to have less of these to kind of follow and keep track of, and just kind of follow the ones that you love and know a lot about. So there's Planet Fitness. Berkshire Hathaway, also kind of a staple in my portfolio. Up 6% on this. Bought around 188 in the summer of last year. So 10% of my portfolio, obviously, led by the legendary Warren Buffett. So Berkshire Hathaway is sitting on a lot of cash. Obviously they have big investments in Apple, Kraft Heinz, a lot of railroads, Benjamin Moore. So all those different companies, they either own significant stakes or they own. There are rumors that Warren Buffett wants to buy an airline potentially. So airline stocks are down. So maybe they use that cash to buy a Southwest or a Delta, because they do have stakes in Delta, I believe, maybe Southwest as well. But Berkshire Hathaway is itching for a deal as well, but they want a deal that is significant for them and will cause them to help increase their revenue and sales. So Berkshire Hathaway there for you. Great company for the long term. Obviously Warren Buffett's health and age is a concern, but I think they're led by a great group of management, and executives where they'll weather any storm that they kind of encounter. So Berkshire Hathaway there for you. And then Apple. So big story is Apple, this year and last year, all those fears of slowing Apple sales and everything, it had those highs of 230 in September, went down to almost below 145 at one point. So, and then it's rebounded. So I knew at the time the fears were way overblown. Apple was already undervalued as it was. Still has a 15 price earnings ratio, sitting on a lot of cash. They just released their AirPods 2, which are probably going to sell like hotcakes. I know they're releasing, new iPads and all that kind of stuff in their hardware line. Their services business continues to grow, and they will be releasing new iPhones. This year, later this year, and next year, and we'll see what they do. Samsung obviously released their folding smartphone. I don't believe Apple's going to do that right away. I think if they are going to do something like that, they're going to make it perfect and usable. I don't think necessarily the $2,000 Samsung Fold will be a big seller. It's still kind of gimmicky in my opinion, but who knows? Maybe Apple this year, next year, they come out with something similar and it just blows everyone away and it becomes revolutionary. So who knows? But Apple's sitting on a lot of cash. They're still one of the biggest companies in the world, if not the biggest company. But 3-month performance, they've done really well, especially the last month. And yeah, Tim Cook has the attention of Trump. He's had dinner with him on a number of occasions and talked with him. I think he's on his technology console, and so he has the attention of Washington, and obviously lawmakers want Apple to succeed as well, since they're kind of the pride of the U.S. almost, technology-wise. That's kind of what every company strives to achieve and become an Apple. But long term, really comfortable with them. Almost 20% of my portfolio, and same strategy as Planet. Maybe they continue rising, going to 250, 300, and then maybe I sell 5 shares and put them in QQQ or put them in something else. So a little bit of risk management there, but comfortable at this point with Apple. Up over 8% on my initial investment. Bought in around 175 or cost average. So I did buy at various points over the last year or so, but pretty comfortable with my holding here. Moving on, TakeTwo Interactive. So this is one of the new ones that I purchased within the last couple weeks. I've been wanting to get in them for a while, and I finally did when they dipped under $100. So I bought in around $99.95. Currently, it's just under 5% of my portfolio, but I hope that will continue to increase. But I do have some cash available just in case they dipped again. So my strategy was waiting for them to kind of go below 80, so then I could kind of average out to like a $89 average cost. So it just kind of helps me stay in line, that strategy. I can talk about it in future videos, but trying to decrease your average cost is a smart one, and just kind of looking at value as well. So very undervalued in my opinion. It's kind of gotten the worst of all those other EA and Activision stocks, but they haven't really done anything bad. They have great games. Red Dead Redemption 2 was a great seller for them. Obviously, there's Grand Theft Auto 6 to look forward to within the next year or two. I believe it's 2021, I want to say. But Grand Theft Auto 6 is going to be huge. They're still milking a lot of money on downloadable content and online with GTA 5. They also have NBA 2K, so a lot of esports potential there as well. I know NBA 2K is one of the top selling and top playing games in China for a computer as well. So obviously they have that international market that favors their kind of games, but yeah, I kind of see their past year performance slightly down, but 5 years, still a big grower. Esports is here to stay. So I opened up a small position here. My hope is that it continues to grow and eventually becomes, 6.5, 7% of my portfolio, and just kind of, something I can hold on to. But, if it continues to dip, I'm pretty confident in this company's futures where, I can continue to invest in them. So that's TakeTwo. And then lastly, Zoetis. So Pet Pharma. They also had great earnings last month or two. So they kind of spiked since that, high 80s point, now 97. So up 7%, a little under 10% of my portfolio. So Zoetis there for you. People love their pets. They're willing to spend on them, whether it's medicine, toys, whatever. Zoetis is there. They're the largest pet pharma player. So 46 billion market cap. So yeah, that's Zoetis. Those are all my stocks and options at the time being. Kind of go through all the watch list stocks I have. I did add the Aero Defense ETF in here. You guys have kind of heard the news with Boeing and their recent plane crash with the Ethiopian Airlines. Really sad to hear, but hopefully they're issuing their software fix, and they can kind of give a little confidence to the market with their 737 MAX 8 planes, as well as their MAX 9 planes, which have also been grounded pretty much by every country in the world at this point. But Boeing comprises a big part of this ETF. Followed by Lockheed Martin. You got Raytheon. You got all those big players. So kind of following this, I think it'll be a decent entry point under 200, just to kind of buy some shares, and yeah, just kind of watching that right now. Nothing's set in stone, so we'll see what happens. Let's see if there's anything else. I did add this ARK Genomic Revolution Multi-Sector ETF. So this is basically those gene sequencing technology companies like the CRISPR stocks and all that. So just kind of looking into this, trying to follow the charts and just see where it goes. I think long term it does have potential, but I think the technology is still very early at this point. But do a little research, figure it out, and we'll see where that goes. So anything else here, following a couple of these marijuana companies, as you see here, you got the big Amazon, the Googles. Google actually did release a what they call Stadia. It's basically a cloud streaming gaming service this week. So that'll be interesting to watch. You can basically play across different devices after you watch videos, and you don't even need a console for it. All you need is a Google controller if you want to play. So might be interesting. Might be a interesting dynamic between them and Microsoft and Sony. With Xbox and PlayStation. See what happens, and see if developers flock to Google service where they want to make games on their Stadia platform. So we'll see what happens there. Netflix hanging in there as well. 360. Like I said, Boeing has kind of dropped since their highs of 440 in early March. So kind of staying around this point. Still may bottom out a bit depending on the news that comes out, any penalties, all that kind of stuff, and whether more, potentially airlines cancel their backlog orders for the MAX 8. So we'll see. Tesla obviously been down last couple month or two. Obviously they released their Model Y crossover, but there's still issues with Tesla between Elon Musk tweeting and SEC getting involved, and them burning cash, and investors worrying about them potentially servicing their debt and all that kind of stuff. So Tesla is something I'm watching, but kind of staying away right now. I hope they do well. They have great products. I'm seeing a lot of Model 3s on the road. I don't know if you guys have that same experience where you're seeing a lot of them, but people love their product. I would love to have a Tesla, but not at this point. But yeah, kind of following their stock. I read Elon's book, autobiography. But love it, and I'll continue to watch it. So there's Tesla for you. Let's see what else that's notable. McDonald's, kind of hanging in there. It's been a good stock kind of to weather through this correction and everything. It actually went up at that point and then kind of teetered off, and then it's been pretty consistent. So McDonald's there. Constellation Brands. I did say I wanted to buy back into this, but I used that cash elsewhere. But still on my watch list. They own a large percentage of Canopy Growth, and they did sell off their cheaper wine brands in the last couple of weeks. So trying to kind of develop a coherent strategy based around their more popular selling liquors and beers and marijuana. So Constellation there for you. Facebook, they've been kind of clawing out since their kind of lows around that 120 range back in December. So wouldn't have been a bad choice to buy some calls at that point. But there's Facebook for you. Yeah, let's see if there's anything notable. Visa has quietly been doing really well last 3 months and year for that matter. So Visa's a big player in the payments market. Other than that, iRobot, I wish I pounced on this opportunity when it was around that $80 range, but it has risen 61% over the last 3 months. So, they've introduced their lawnmower robot. I don't know if that's selling yet or not, but, I have a Roomba. I love it. They make great products, and, smart home automation, all these little technologies are definitely the future. People want to make their everyday tasks easier, and iRobot's going to help them do that. Anything else here? Disney, they recently merged with Fox this week. They closed their deal, so their stock is down. Obviously, with their stock, you have to have a lot of patience. It hasn't done too much over the last 5 years. I mean, even the last 3 or 4 years, it's basically been flat if you think about it. But, has that dividend. Obviously people are betting on their streaming service being able to overtake Netflix, and with all their content, they're bringing a lot of good things to them now with X-Men and Modern Family, and I think Deadpool, I believe 2 was with Fox. So they could potentially make a lot of cool movies between their Marvel universes and, now X-Men and Deadpool. So opportunity there for Disney. Let's see if there's anything else here I can talk about. Square, Square's kind of been around this range for a while, $75. I think it's a decent long-term entry right now. So square there for you. Other than that, not too crazy. I have been in and out with Canada Goose recently with calls, and I'm glad I stopped because they have dipped to below 50. So I will kind of show you my trades that I made here. So back in January, so I did buy a $95 premium, $65 call for $418. I did sell it around $235, so sold it for a decent profit there. You know, obviously my research was seeing a lot of people in those coats in the city and around everywhere, and I know that, you know, people in Asia and China, they love these jackets. They're very popular. Like there's stores that opened in China, for example. People were lined across the block, basically like an Apple store almost, but really expensive jackets. I mean, you're paying at least $1,000 for these jackets, honestly. But you know, they have really good fur, coyote fur, and they're just very warm. And they have great marketing, honestly. You know, they're used by you know, people that traverse the Arctic and very cold climates. So, you know, figured I'd do a quick little jump in on them and get out really quickly, and I'm glad I did. So stuck to a strategy, and I'm glad it worked. And I did buy another option for $165 here for July for $70, and then sold it for, you know, small profit, $208. So locked in a quick one there, and then after that point it kind of started going down. So, you know, nice little opportunity there for Canada Goose. I'm kind of glad I stuck to strategy and it worked. So other than that, that's pretty much it. You know, continuing to try to make smart decisions, and I want to keep growing this lot. So I was over 10,000 this week until yesterday, so it was nice to break that barrier. Definitely a psychological barrier for me, but I hope that it'll continue to grow this week. Still waiting for the trade talks. It's been a while. I mean, obviously we were supposed to get a trade deal by March 1st. It's been pushed back, and President Xi and President Trump were supposed to meet by the end of this month, but it doesn't look like that's going to be happening. So who knows when that's going to happen. I think both sides want this trade deal to happen, and there's a lot of big things with, you know, China potentially buying more products, but also things like technology theft, which China has, you know, apparently been doing for a lot of years, and stealing secrets and, you know, company secrets, all that kind of stuff. It's really hard to operate in China without following the regulations. So that's probably a big sticking point in these trade talks right now. But yeah, that was just a quick March update so far. You know, glad I've been doing really well. So 25% up over the last 3 months, you know, kind of compared to the other indices. You know, NASDAQ 22%, so beating that. And then the S&P up 16%. So outperforming the market, that's my goal. I think I have a good strategy here. You know, high growth, good companies here, and ETFs. And then, you know, kind of mix in some options here where I find opportunities. So that's kind of it. I am sitting on some cash right now, about $600. You know, whether that's TakeTwo dipping, or I just continue to put it into the QQQ index, or potential new IPOs or something. You know, will be determined. So thank you guys for watching. Thank you guys for listening. Let me know if you got any suggestions or tips or anything that's helped you within these last 3 months. Since those Christmas Eve lows, and what's been working for you, what hasn't. So yeah, thank you guys for watching, and have a great weekend, and look forward to the next trading week. Bye-bye.